Ladies and gentlemen, NIO profitability is under scrutiny as commercial misuse of free battery swaps raises concerns among shareholders and impacts company costs. This issue is likely to frustrate anyone who's invested in NIO, especially if you're among the shareholders. It's no secret that the question of profitability looms large for NIO shareholders, fueling ongoing discussions and anxieties. Investors are keen to know when NIO will achieve sustained profitability. The shift to profitability isn't just about the numbers. It fundamentally changes the perception of risk for both the company and its investors. Once a company is profitable, concerns around things like capital raising and share dilution are greatly reduced, giving shareholders a reason to expect positive growth. Profitability, however, is impacted by numerous factors. Right now, there's an issue occurring in China that has added another layer of frustration for shareholders. This problem revolves around the misuse of NIO complementary services. Here's a specific example. A NIO ES8 model has been spotted being used as a tow truck, essentially becoming a commercial vehicle. This owner is running his NIO through a service app known as Hulala. This app functions somewhat like Uber but is intended for hauling goods. People looking to transport items can use Hulala to book vehicles. And yes, this particular NIO ES8 owner has enlisted his vehicle to do just that. This situation is interesting on a couple of levels. For one, it showcases the NIO ES8 spaciousness and towing capability, proving it can handle substantial loads. With seats folded, the ES8 provides ample cargo space, and with a tow hitch attached, the car can pull even more. However, there's a significant problem here. The vehicle is benefiting from free electricity for its commercial operations. This first-generation ES8 is outfitted with unlimited battery swapping privileges, meaning the owner can recharge the battery as often as needed without ever paying for it. This benefit was part of the initial sales incentive for early NIO adopters, offering them a lifetime of free battery swaps. Much like Tesla once offered its early customers free supercharging, NIO extended similar incentives for its early supporters. While offering these perks wasn't inherently an issue, the challenge arises when users start exploiting them. Another example involves an ES8 owner who used his car battery to power a convenience store. By recharging at NIO swap stations for free, he managed to completely avoid electricity costs for his business, diverting NIO energy resources for personal gain. For shareholders, this can be incredibly aggravating. Each instance of free battery swapping or energy usage technically comes out of the company budget and indirectly out of shareholders' pockets. NIO is aware of these abuses and has taken some preliminary steps to mitigate them. For instance, they've recently introduced a cap on the monthly electricity output for vehicles with free, unlimited battery swaps. Once owners reach this limit, they have to start paying for additional battery swaps. Despite these adjustments, some early models continue to take advantage of these privileges. Owners can transport cargo from one location to another without incurring electricity costs, earning money on every job. Since they're recharging for free, they can keep these operations going without facing overhead on fuel. Once they deplete the charge, they simply head back to a battery swap station for another free recharge, using company resources while accumulating profits. NIO has recognized that these perks need stricter regulation, but implementing these changes without upsetting early adopters is complex. NIO had initially stated that unlimited free battery swaps couldn't be used for commercial purposes, including ride-hailing and freight services. Yet, in most cases, they've allowed certain abuses to slide, perhaps to avoid alienating their early customer base. These initial customers are often the company's strongest advocates and have contributed significantly to NIO reputation through referrals and word-of-mouth marketing. In some instances, early adopters have reportedly influenced multiple NIO sales simply through their recommendations, and their endorsement holds a lot of weight. In light of this, NIO is caught in a difficult balancing act. They need to protect profitability and reduce unnecessary expenditures while maintaining goodwill with these loyal customers. the company has made adjustments to its service offerings, including scaling back on complementary services in insurance and maintenance packages, reducing the points earned through NIO loyalty program, and tweaking other benefits. But for many investors, these changes still seem insufficient given the current economic demands. Consider this: in the past, NIO complimentary service was extensive. When an owner sent a car for maintenance, NIO would arrange for a team member to pick it up, fully charge and wash it, and then return it to the owner at no extra charge. If repairs took longer than a day, owners were compensated with NIO points. These points were offered as an alternative to a loaner vehicle, should the owner choose not to take one. It's easy to see how this system was open to misuse. For example, an owner might report a minor issue, such as a slight sound coming from a window, just to trigger the service process, which included a free car wash and recharge. Many owners have taken advantage of these benefits, treating them as an opportunity to get free maintenance, car washes, and charges. While NIO exceptional service is commendable, these free benefits can strain the company's financial resources. And though not all customers exploit these perks, the fact remains that NIO accommodating policies could be tempting for those looking to maximize personal benefits without paying out of pocket. Interestingly, while NIO generosity is an advantage, it may also pose a financial risk. NIO likely feels obligated to maintain a positive relationship with these early customers, who have contributed to the brand visibility and growth. Studies have shown that a significant percentage of NIO new sales are driven by customer recommendations. Thus, keeping these early adopters happy seems like a priority, especially in a market where reputation can make or break a brand. That said, reducing instances of exploitation will be key to bolstering the company profitability. One major cost area for NIO is research and development R&D, which is essential for staying competitive but undeniably expensive. Finding ways to cut down on non-essential expenditures, like excessive complementary services, could help redirect resources toward core business operations. By reining in these extraneous costs, NIO could be in a better position to reach profitability sooner. The specific issue of owners using NIO vehicles for cargo services is likely an isolated case, but it underscores a broader issue: the need for clearer boundaries and more rigorous enforcement. Shareholders are aware of the financial strain caused by the free-for-life model, and many hope that NIO will eventually phase out these loopholes. Ideally, the company would impose limitations that help safeguard its financial health while still maintaining a level of service that's attractive to customers. Some early NIO adopters may feel entitled to these perks, given their role in supporting the brand in its infancy. However, allowing widespread abuse could harm NIO reputation and its financial future. Restricting access to freebies and optimizing service costs will be critical steps toward sustaining the business in the long term. To achieve profitability, NIO must continue refining its strategy, not only by limiting excessive freebies, but by strategically investing in areas that generate long-term value. R&D will remain a necessary expenditure, but addressing these smaller inefficiencies could make a difference. It's not just about limiting cash outflows. It's about using resources efficiently to support sustainable growth. The profitability question remains, and while NIO has been proactive in scaling back some of its complementary offerings, more could be done. Reassessing policies on unlimited battery swapping, loyalty rewards, and routine maintenance perks would help NIO stay financially agile and ultimately lead to better returns for shareholders. In summary, while NIO generous perks have created a positive customer experience, further refinement will be essential to foster a more sustainable path to profitability. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next